Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking back in on the MJ space. So CGC bears coming out swinging. Seller exhaustion certainly not on the menu today as the bears broke the daily inside bar. This is now the third daily inside bar in a row that has broken bearish. Every single one that has broken bearish closes near the low of the day. We had one higher open. We had, let's see, where's our other inside bar? So inside bar bear break with a higher open, inside bar bear break with a little bit of a higher open, inside bar, bear break, all of them weak closes. We'll see where we open tomorrow. Gap down, open, you better believe I'm a buyer. I got stopped out of some of my bounce plays at this point, VFF and CGC, but still trading CGC and not giving up on this bounce in any way, shape, or form, because with my style, what I'm looking to do is keep my losses small, because even if I stop out, let's say 20-cent loss, 20-cent loss, 20-cent loss, if I stop out 3 times and then we get the real bounce, the size of the real bounce, in my opinion, is going to be, $1.50 to $2 when we actually get some meaningful follow through. So I can offset those losses, those little losses, as long as I keep them small. Once the real bounce gets going, I can offset those. So an example would be just today at the end of the day or into the weakness, I made an entry. My average was 23.50. I sold half at 23.60. I put my stop under the low of the day, and I didn't stop out, and I kept that half of a position into tomorrow because I know that if we were to gap down open or if we were to flush down weak first thing, I'm going to be looking to enter multiple positions. So I'm just fine with my first position of this new bounce attempt being 23.40 as a break-even starting point. So what have we been watching? The 4-hour, 12-period exponential resistance. What did we reject from right at the open today? That now makes how many days in a row? So many rejections from this level, but we pulled back so much that we can even see a bounce take place tomorrow. Let's say we hold the low of the day of 23.36 and we see a bounce take place. We can bounce 4% and still be at that resistance. So the real bounce that I'm looking for isn't going to happen until 2 things take place. Number 1, we get over 4-hour exponential resistances. And number 2, the daily pattern of a lower high every day, which is now 10 days in a row, that has to break as well. So even if we break the low of tomorrow, let's say we flush $23 support first thing, we can see a V-shaped recovery and an oversold bounce of 6% and still be looking up at that resistance level. And that's what happened on one of the more recent bounces where we saw that quick flush and the top of the bounce was just looking at another rejection from that resistance level. So that's what I'm watching, the key exponential resistance into tomorrow. Where's our support? We don't have anything nearby. So it is a falling knife in that regard, and RSI levels get extreme when there's no support levels nearby. So we're looking down at the next actually there's a little gap here that filled. 24.05 was the gap that filled. Now we're looking down at 21.40. So 23, 22 psychological levels. And again, when the bounce does occur, we will just be looking for a daily lower high to form. I'll be targeting exponential resistances. So I'm not looking for any kind of massive home run. Even if we got a 10% bounce from where we stand right now, we would still be under the daily exponential resistance. So there is space to bounce, but keep that resistance in place. And the sector right now, both US and Canadian, in my opinion, is very strongly correlated to CGC. When you have extreme emotion, whether it's euphoria or whether it's fear, the sector as a whole links up. So I'm looking at individual names and I'm saying, yeah, VFF is really beat up or OGI is extremely beat up. But they're not going to bounce in any meaningful way unless CGC gets a meaningful bounce, in my opinion. So all eyes are still on CGC, and we'll see if that ends up being the case. As far as that's one thing I'm going to be watching. Once the bounce does take place, what does the correlation look like across the sector, and what does it look like with the US MJ names based on what CGC is doing as well? So the fear is still certainly high. The despair is out there. There's people throwing in the towel. That happens every cycle. We flush out those who don't want to do it anymore and stopped having fun, and then we see a shift in sentiment. So we've been looking for that shift in sentiment for a while. We haven't gotten it, because we haven't seen any fake outs. Again, every time we see a bounce, I just keep saying, have to see the higher low, higher high, and we have not gotten it on CGC anytime in the last 4 months, but still just watching. Oversold bounce is imminent. Just want to be cautious and protective rather than scaling in, running out of cash. Now my break-even level is $25. I've got no cash and I'm at the mercy, completely out of control of the trade. If I'm stopping myself out, keeping those losses small, I'm in control of the trade and I'm able to maneuver around. But as soon as my hands get tied and I'm out of cash, that's that, and that's something that we want to avoid. Looking at Cron. So Cron with a weak close as well. We did see a decent little bounce in there. S&P 500 correlation is absolutely present. And the S&P 500 bounced a bit this afternoon after a very weak morning. One thing I want to point out with CGs or with SPY, I was able this morning to say we're likely going to see a weak MJ day. And the reason was correlation with SPY. So what stood out to me, correlations are stronger during regular trading when the bell rings. So if the S&P 500 had an all-out dump on Friday, and we're just looking for a 4-hour lower high to form on its bounce. Let's get rid of extended hours just because it clutters things. So on this bounce, we know we're just looking for a 4-hour lower high. We see a gap up open today in SPY, $1.50 higher than where we closed. So with that gap up, I say, okay, SPY is due for hourly consolidation. This is how we started the day, looking for hourly consolidation on the S&P 500. With that gap up open in SPY, the MJ sector saw higher opens, but they were weak. They weren't anything special. So I was able to say this morning, okay, with how the S&P 500 is set up, if we see hourly consolidation on SPY, which we are anticipating, the MJ sector is not positioned well to absorb that. We're not seeing much correlation on the gap up open. And if the correlation picks up strength after the bell rings, as it often does, that SPY pullback, as consolidation is due, is only going to hurt the MJ sector. And that's how it played out with 4 hours of very solid consolidation this morning. So Cron, looking at the hourly chart, anything under, we have a short-term resistance level of 1121, but saw a strong start with a quick little bull move up to 1185, and then we dropped down and dropped 8% from that level. So when any kind of bounce gets going, I'm going to be looking at essentially anything under 1403 as a daily lower high. But let's see if we have any clear exponential resistance levels here as well, mimicking CGC to a certain degree. And again, the bounce for Cron will take place when the bounce for CGC takes place, in my opinion. So bears keeping their control, especially with the weak close. And what the last couple of days did is cool off the hourly and 4-hour RSI on Cron. ACB is still weak. We're down near the low. Pretty much the range of the last 2 days is the exact same on ACB. So if we see a bear break of 553, there's no support nearby. And if we get a break of 586, we'll still say that anything under 620 is just a lower high on the daily time frame. APHA, this is a red flag. So I was talking about looking for a daily higher low to form for the potential of a daily trend change and for a weekly higher low to form. But if you're going to get back a 6-day bull move grinding higher in 2 red days, that's a red flag. So 583 support still holds. In my opinion, if CGC gets a meaningful bounce tomorrow, 583 can hold for APHA. If we don't, then it's not likely to, and we're back to the gap fill. So this is a red flag. I was scouting for a potential entry on APHA, but today is the last thing that I wanted to see. So I am no longer interested in APHA at this point. My focus is still on CGC and VFF for these bounces. And if we do see a bear break of 583 on APHA, we're looking back at 541 as the next level. Again, cannot stress enough how every single bull move is just a daily lower high on all major Canadian MJ names. I would be a frustrated trader right now if over the last 4 months we were getting daily trend changes and no follow through and heading back down to lower lows, but it's just been a very clear downtrend where there's no higher lows and higher highs after any move. It's happened in the US where we have gotten some daily trend changes, but not on these major Canadian major Canadian MJ names. TLRY continues to fall apart. We're looking down now at 26.25 psychological. The all-time low is 2010. If we were to drop down to that level sometime in the next couple of weeks, I'd be interested in bottom fishing it, but otherwise, I'm not interested in TLRY. It will likely bounce when CGC bounces. VFF. So VFF dropping down 1030 is a base of support. It's a quadruple low, and someone added shares to that. It got chipped away each time it got tested, but then a new batch of shares was on that support level at the end of the day. If 1030 breaks, we look to 10 psychological. We are still looking for the potential of a weekly higher low to form. We could drop another 15% and still be above that support. But obviously much more pullback than the bulls would like to see. That break at $12 just opened the floodgates for the bears to run away with it. So I'm still interested in VFF as well. The 4-hour RSI is at historical bounce levels and getting down towards historical lows. But again, it's the kind of thing where I make note of that. But once I see that the correlation is there with CGC in the sector, I can say, well, that RSI is going to stay beat up until CGC bounces. So that alone is not enough for me to be looking for a trade. I have to see CGC momentum shift as well if I'm going to be looking for VFF to bounce. And I may look to diversify when we do get bounces. You know, if I choose just one name, I'm guessing a little bit. Some names are going to bounce stronger. Some names are going to bounce weaker. And I do this in the cryptocurrency space as well, where if I'm looking at two different names, it's a little bit of diversification. And one is going to bounce stronger than the other. And trying to guess which is a bit difficult. So for VFF, it's the hourly exponential resistance that's crystal clear. Look at the last 5 days. Look at the high of today right at the open. Look at the high of yesterday right at the open. Both rejected. The bounce yesterday rejected. The high of today rejected. Now we're just trading sideways as those exponential moving averages continue to drop. And they're certainly going to be in play tomorrow. First thing. OGI is falling apart. OGI, we're watching for a volume climax. Highest volume we've seen in 6 weeks. Daily RSI is absolutely crushed. We're looking at monthly support, which is quickly approaching. So the monthly support on OGI is 297. So we are still well above that. We will have to be cautious of the monthly head and shoulders. Once we do form a higher low compared to 297, we'll look for a monthly lower high to form after that. So bulls have to be cautious of a loss of the monthly uptrend. That's a ways away. Step number one is to see some kind of bounce take place. And we'll anticipate that anything under 528 is just a daily lower high with daily exponential resistance as a great guide over the last 6 weeks. T-God. Following through on the pullback. So we got the low, high. Let's draw it out. Higher low of 295, lower high of 332. And 295 support has to hold. Otherwise, we're right back in a daily downtrend and heading back down towards 264. So 295 key support approaching. Bulls really want to hold that level to stay in this tightening range. OH gave back. I was actually surprised at how well OH and CL held on this morning, but we knew that hourly time frame was overextended, so we gave it all back. We have our low, high. We are looking for an hourly higher low to form compared to the low of yesterday, and we'll look for the hourly equilibrium. And CL is in the same boat, scouting an hourly higher low with all that volatility from the last 2 days, but giving that move back completely. And when you see that happen, you know, OH stood out yesterday up, 9% or something like that, where everybody else in the sector was red. But if you're going to just pull back, well, actually from the low it was more like 13%. But if you're going to pull back like this, 8% from the high, bears have no reason to cover shorts, and bulls have no reason to be buying any higher lows. It's just the lack of follow-through sector-wide that is rampant, that is keeping the bear pressure and bear comfortability present. Cura, earnings came out. I have no idea how we're going to react to these earnings, and in my opinion, if CGC gets its bounce going, Curaleaf will probably go green tomorrow. And if CGC drops down to lower lows, Curaleaf will probably go to red. If I had to guess, I would say it's going to be the same color as CGC. Support is down to 816 and 802. If the bulls are going to see a meaningful reaction, they have to break 903. And even then, that's a bare minimum bullish reaction level that they want to break. The most important short-term level for me is 976. And a lot of us used that move, that candlestick, to bail out of positions a few weeks ago. C-Web, very brutal today, down 10%. The break of 2308 lost short-term support, and the bears have turned on the momentum since then. So the monthly equilibrium is in play, very likely. The weekly chart has to be careful of a head and shoulders here as well. Size of the pullback, we are likely to still form a higher low compared to 1785, but we're also likely to form a lower high once that weekly bounce does take place. So we would have to be cautious on any name that looks like this. We have to be cautious of that right shoulder forming, just like OHGI's monthly chart. Bears are in complete control. We'll likely see a bounce sector-wide. We're not oversold on the daily yet, and there's a gap down at 20.05 to be keeping an eye on. TRUL dropping down to lower lows. That weak bear flag on the daily time frame, anything under 1145 is just a lower high on the daily chart. And we're looking down at the all-time low on TRUL as we have been in a prolonged downtrend. IAN reaction to earnings bearish, probably hindered by the sector as a whole, but the only thing the bulls have going for them is we haven't broken 312 yet. So 312 potentially going to be tested tomorrow, and the bulls have to break 345 to see any kind of short-term momentum shift. And this is the lowest close we have seen on the entire pullback for IAN. MedMen, equilibrium most likely scenario. So we now are looking for a higher low compared to 241 after the inability to break 284 resistance. So tightening range likely into next week for MedMen. So things are still very bearish out there. Again, you see it in social media. People reaching their breaking point as far as their ability to keep looking at their red account or a dollar level that they've reached where they aren't going to lose any more than that. And that's a good thing to have, honestly. I mean, I see people say, I'm throwing in the towel. And not everybody is meant to be a trader or an investor. And if you are having psychological negative impacts and it's affecting your life, definitely set a hard level for yourself and say, if this level breaks, I'm done with this game. That's perfectly fine. As opposed to having the, addicted gambler's mindset and never having a done point and potentially blowing up a lot more capital. So I'm not saying give up. I'm just saying that there are people out there that want to give up, and some people should probably give up. But not everybody, because we see this often in many euphoric cycles. We've seen it in the MJ space often. This is definitely one of the more brutal pullbacks in the MJ space as a whole. But we'll make it through it. I know we will. So we'll keep an eye on CGC for the oversold bounce. Again, the most important takeaway is even when we get the bounce that I'm looking for, and that bounce can be 10, 15%, we are still just looking for daily lower highs. Because CGC can bounce 20% and form a lower high compared to 334. Have to see the bounce, the higher low, and the follow through if we're going to see any kind of daily trend change, which again, we have not seen in about 4 or 5 months at this point. Keep an eye on SPY. SPY is in a daily equilibrium tightening range. If this pattern breaks bearish, there's going to be a fierce spike in the market. And that would certainly lead to a capitulation flush in the MJ space if that were to happen sometime this week. I don't think it will, but it's absolutely possible. So hope other than the MJ space, unless you're short, hope things are good. And we'll end it with some Iceland. And we'll check back in tomorrow. Have a good rest of your day.